Hey guys, welcome back to another video. My name is Adam from Sinofsky Stocks. Today we're going to do the weekly oil tanker update. And first off, I just want to say we're past 100 videos. This has been pretty impressive for me. I just started out making videos in late May, and so I've just been a couple months, and I've definitely just fallen in love with making YouTube videos. Hopefully they're informative, and I just want to say, thank you to all of you for your comments, your likes, and all the subscriptions that I've had over the past couple of months. It's been truly awesome. Yeah, without saying more, let's get right into the tanker update. But thank you. It's been quite the journey so far. So with NAT, over the past week, we actually have seen an uptrend, over 4% increase in the stock price. Over the past month, we're still actually positive, but just like pretty much by 0.3% for NAT up on the month. Frontline, we're actually positive by a significant amount, by 6.44% on the week and about 10% on the month, as we can see right here. And Euronav was actually the stock that was down this week by, if we can see here, by about 3%. And then on the month, it was down by about 1.48%. And again, Euronav is one of the biggest companies market cap wise and fleet wise in the world for oil tanker stocks, right? And recently I found an article, and this is by David Modell. If you don't know him, he also has a YouTube channel, which I'll link below. Also, I'll link the article down below as well. And here we actually did a collab on a video about tanker stocks about a month ago, and I think it's time for an update. But anyways, he wrote an article about why value players and contrarians should consider oil tanker stocks instead of the high flying tech stocks, right? So I totally agree, and I think tanker stocks are so beaten down and so depressed right now that they're actually considered value plays. And he goes over what tanker stocks are and how, unlike oil companies, which may come and go, those oil companies are always going to need tankers to transport and store oil. Okay, he talks about the different sizes of the tankers, and he also talks about some of the top picks of the tanker market, like Euronav. And so if you want to dip your toes in the oil tanker market, Euronav is definitely the best place to start, also in my opinion. Okay, also this message was not sponsored. We're just friends, and I thought I'd just share his content because I think this has some pretty valuable information, especially if you're new to the tanker industry. But let's just look at NAT's chart a little bit more in depth. I'll minimize this, and we can see first off that over the past 3 months, it's just been decreasing stock price all the way from like $4.10 all the way down to $2.90, and it actually tested this bottom about 3 times, once here, a second time here, a third time here, and actually a fourth time here, where it was hovering around the $2.90 range, and that seems like a bottom for NAT. And then finally it increased up over the past month. We can see this slight increase, and again it tested another bottom at $3.05 2 times before moving upwards towards the end of the week. Again, relative strength index is sitting at a 53, which means that this stock is technically neither overbought nor oversold, so kind of sitting around the medium range. And if we're looking at the MACD, moving average convergence divergence, over these 3 months, we can see that it was well below zero for all of it, except now we can see that there was like an inflection point around here, and finally the MACD started moving upwards, approaching that zero line. So when the MACD is moving upwards, that generally means a short-term bullish trend, especially since we're looking at the 3-month chart. Okay, so just a couple updates, which is this just means that the stock price might either fluctuate within this line or slightly increase. Okay, that's just for the short-term prediction here. Okay, of course, NAT also posted their Q3 results, which was pretty much like it was below analyst expectations. They lost, I believe it was 7 cents a share, but they were expected to lose. I'll just put my face back up. They were expected to lose 4 cents a share, so not the best Q3 results, and they attributed it to a high amount of dry docking days where pretty much oil tankers have to stop and repair ships. So of course they can't use those days to actually bring in revenue. from transporting and storing oil. So they had a high number of dry docking days, which was good because, of course, spot rates were depressed. And that's the second reason why they had such dismal earnings, is because, of course, spot rates were like some of their lowest ever in the year, okay? And we're going to go over that in a bit. And again, the future of the tanker industry, as always, and any updates, all right? So the first sort of article I want to go over is that oil is building up storage again, but this time it's not going to be the same as it was in April, okay? And one reason for the huge increase in tanker rates in April was that it caught everyone by surprise, right? So before that week, it wasn't even clear that it was technically possible for contracts to go down. They were talking about the oil contracts. They actually went into negative territory, but of course they did. And oil demand went down and supply went through the roof, which again increased spot rates, okay? And this time, they're saying that traders have ample warning. In the week ending November 13, 61.6 million barrels of crude were in storage in Cushing, Wyoming, which is about 81% of capacity. Okay, that's just 3.8 million barrels below the storage levels from April, right? So storage levels are actually nearing that high. Why? Because of the pandemic, because of the second wave, right? But what this means is that, does that mean that spot rates are going to increase again because there's less demand for oil, whereas there's oversupply? No, not necessarily, okay? The reason why is that the oil market has changed substantially since then. Since states are once again imposing restrictions, this reduces demand for gasoline and other fuels, but is nowhere near as severe as the lockdowns in April, okay? And oil producers have reduced their activities too, making it less likely that they'll pump out so much oil that it will start overloading storage capacity. So of course, oil pumps are not going to be producing as much oil as because they're already reduced in their capacity, okay? So most expect demand to exceed production in the coming weeks and months, whereas in April, demand was falling much more rapidly than supply, right? So of course, this is why it's different. And there are other signs that there's enough storage too, et cetera, et cetera. Okay, so what this means is that, personally, I thought that if there's a pandemic second wave, this could actually push the spot rates way higher and we would have a little bit of a boom again in the tanker market industry. However, based on this article, it does not seem like it's going to happen. Okay, and that doesn't mean that, of course, NAT is going to run out of business. It's just in the short term, so Q4 and Q1 of 2021, their numbers might be even worse than what they posted this quarter, which was a $10 million net loss, okay? And so if we're looking at another article, this article is basically saying the same thing. And of course, they're talking about reduced fleet growth, and they're talking about how tanker stocks were up this past Monday on vaccine use, both from two promising vaccines from Moderna and Pfizer. And I mean, he's like, but beyond this, it's likely just a mix of short covering and bottom feeding buyers. So shorts covering their positions, and people like us contrarians, value players, bag holders, if you will, buying at the bottom, okay? And they're saying that near-term tanker fundamentals are grim just because of the depressed spot rates mainly being prolonged for the next couple quarters, okay? And weak Q4 conditions may confound some views that markets would see normal seasonal gains, but 2020 is, of course, far from normal, okay? So what you're seeing here is that with renewed lockdowns, this means that demand is going to be depressed in a time when demand for tankers is actually increased, okay? Why? Is because generally when there's more heating indoors by natural gas, demand of oil generally goes up, and what that means is that that's good business for oil tankers, right? But this winter, of course, it's different. Why? Because, demand of oil is actually going down because of reduced traveling and restrictions on businesses, okay? So businesses are not using as much oil to transport food around, for example, in restaurants, all right? And so again here, this is just clarifies here, the usual seasonal backing of improved demand for oil into the key winter period has not gained traction, right? So inventory levels are currently much higher than previous winter levels. Demand for crude and oil and refined products is much lower than previous winter levels. Rates would be much higher now if rates didn't reach astronomical levels in Q2 of 2020. That strength was borrowed from today, okay? So of course, during the Q2 2020 conference calls, shipping executives and analysts pointed to potential fleet growth opportunities ahead, okay? Part of the reason why this is because also right now it's one of the cheapest times to actually buy a Suezmax or a VLCC vessel. Okay, because right now no one's willing to buy due to the uncertainty in the market. No one's willing to invest like $50 to $60 million on a Suezmax or like $70 million on a VLCC carrier, right? Especially given these conditions, right? And pretty much okay. Of course, this is again expounded right here. The next step would typically be to expand and renew fleets. However, at this point, we are in no rush. We're not there to do anything at the moment. We're on the fence now. The circumstances with the pandemic are just too unusual and unprecedented, right? So everyone's right now on the sidelines, right? They're just trying to get through the pandemic, issue more shares. Even NAT's trying to issue more shares. They actually have 2 new building orders for their Suezmaxes, which are expected to come, I believe, at the end of 2021 or even 2022. Okay, and again, they bring in the CEO of Euronav, again talking about the exceptional times, et cetera, et cetera. Okay, so here they talk about earnings, and pretty much a lot of tanker companies lost on Q3, whereas I believe a couple were just like break even or even above expectations. Okay, but again, what this means is that we might have some tough periods ahead. Of course, for value investors, we can see, for example, like an NAT stock, if we're looking at the year to date, it's down by, the year to date was $4.84. Now it's down by 31%. Okay, so we can see we've come a long way, even from the highs in April, where the stock reached over $7. We can see we're 54% down since then. Okay, of course, I'm holding my NAT shares because I see this as a long-term dividend play. I see this as oil is not going anywhere despite the EV craze, despite the tech craze, despite demand for oil decreasing. I see oil demand picking up, and with this, the beaten down stocks that are the oil tanker stocks. Of course, again, that's just my perspective. Please do your own due diligence, do your own research before buying and selling stocks and other equities. And as always, if you enjoy the video, please be sure to give it a thumbs up. I appreciate it, and subscribe if you haven't already. It doesn't cost you anything, but it gives me tremendous opportunity to make more videos like this. But yeah, anyways, take care, guys. I hope you're having an amazing day and have an amazing weekend, and I'll talk to you next time.